Welcome back to Return My Capital. Today we're going to take a look at another ETF, the Fidelity MSCI Information Technology Index ETF. Ticker symbol is FTEC. I wasn't familiar with this ETF. It was recommended by a subscriber, so we'll take a look at it now. You'll see that this fund has, just let's say $11.5 billion in net assets, so certainly a large fund. And this is tracking US companies of the information technology sector. It's quite concentrated. And so, certainly, again, you're seeing here, United States, 99% of the fund. So, really, the entire fund. It is focused entirely on the IT sector. We'll take a look at the top 10 holdings here. Now, there are 296 total holdings of this ETF, so a significant amount of companies, but as you'll see, it is very concentrated. Of the top holdings, that does make up nearly 60% of the entire ETF. But even more than that, you take a look at the top three holdings here of Apple, Nvidia, and Microsoft. That makes up 18, 15, and 14% of the ETF. So really, once you move past those top three of Apple, Nvidia, and Microsoft, then you're looking at Broadcom with a 4% weighting, Salesforce with a 1.75 weighting, Cisco 1.7, Oracle 1.6, IBM 1.6, Accenture 1.3%, and Palantir actually popping up into the top 10 at 1.3% as well. Again, there are 296 holdings in here, but you see that overweight nature of Apple, Nvidia, and Microsoft. Not going to go through all the entire basket of holdings here, but just a couple other names outside of the top 10 with weightings over 1%. You've got Qualcomm, Adobe, Intuit, AMD, ServiceNow, Texas Instruments, and that's the last of the companies in this ETF that carry at least a 1% weighting. I mean, you've got some massive companies in here, such as Palo Alto Networks, Applied Materials, Lam Research, KLA Corp, a couple of big semi companies, CrowdStrike, massive cybersecurity provider, along with Palo Alto Networks, Arista Networks. So some very, very large companies, but are well under a 1% weighting in this ETF due to the overweight nature of those top three. So you get down in here into some very, very quality companies, but you're talking about under 0.1% weighting for some of these companies, and then several with a 0.01% weighting. We'll quickly look at it here in Seeking Alpha. You'll see over the last year, the ETF is down 2.5%, currently trading for just under $150 per share. Really, it's that year-to-date performance. I'm recording this on April 10th, and if you follow the markets at all, certainly you are very well aware of what performance has looked like year to date. So down 20% year to date, entering a bear market. Obviously trading towards the bottom of the 52-week range of 134 to 193. Again, shares are currently at 149. What's nice is just a 0.08% expense ratio, so very similar to other Fidelity funds Fidelity funds as well as Vanguard funds. Certainly iShares, broadly diversified funds, very minimal expense ratio because it is focused on the IT sector. Inherently, that's going to result in a very low dividend yield. And, it's a quarterly dividend payer, but it is just a 0.56% yield, a 90-cent dividend rate. Over the past 5 years, up 124%. Over the past 10 years, up nearly 366%. So we already covered the top holdings. Quickly comparing the performance against the S&P 500 on a total return basis, you'll see that over the past year, FTEC is lagging the S&P 500 by 2.5%, but on the 3-year, FTEC is up 11% over the S&P 500. On the 5-year performance, FTEC is at nearly 150, the S&P 500 at 111, and then on the 10-year, 440% just over for FTEC compared to 212% for the S&P 500. Again, almost 100% into the technology sector, a little bit into financials and industrials, maybe some reclassifications for a handful of holdings there. Already covered the top 10 holdings. Again, 296 total holdings. Top 10 make up 60%. Really, though, it's the top 3 or 4 that have significant weighting. Dividends, again, already covered. Yes, it is up and to the right on a relative basis, but this is not a dividend-focused fund. In 2014, the annual dividend was 35 cents. 5 years later, in 2019, it went from 35 cents to 75 cents. So yes, while it's not a dividend-focused fund, you do still see a doubling there from 35 cents to 75 cents. 5 more years later, in 2024, it was up to 90 cents. So from 19 to 75 cents, 24, 90 cents. So you are still appreciating a growth in the dividend over time. Obviously, this fund is well under its 200-day moving average, as the markets have been absolutely ugly over the last weeks and months. We'll quickly compare this ETF to a couple other similars. So we've got FTEC. We'll compare this to the Qs. We'll compare this to the Vanguard Growth and the Vanguard IT. And then we'll, just for good measure, we'll compare this to the Vanguard S&P 500 ETF as well. So year to date, things aren't going particularly well for any of these, but you'll see FTEC down, very similar to VGT, which is the Vanguard IT sector fund as well. So they're tracking the same companies. You do see at the top here, just real quick, the expense ratios. So FTEC 0.08, the Qs at 0.2, Vanguard Growth VUG at 0.04, Vanguard IT Index Fund at 0.09, and VOO, the S&P 500 fund from Vanguard, at 0.03. Bouncing back to returns, that was price return. Let's do total returns and factor in dividends for whatever it's worth. So year to date, VOO is down the least at negative 11%, the worst being FTEC and VGT, the IT focused funds, down 19% each over the past full year. Let's see. VOO is at 2.4%. VUG, so the Vanguard Growth ETF, is the highest performer at 3%, and the worst performer is VTEC and really VGT, both down 1.4, 1.5%. Over the past 3 years, you'll see the top performer. I mean, really all of them are performing similarly over the last 3 years. Let's see, VOO is at 24%, VGT, let's say 33% for both VGT and VTEC. The Qs are at 32.5% and 30.5% for VUG. Over the past decade, start to see a little bit of dispersion. Really, the two best comparisons here would be FTEC and VGT. So VGT is performing the best at 427%, followed by FTEC at 416. You've got the Qs coming in at 351, followed up by VUG at 255 and VOO at 199. So again, FTEC very similar to a VGT, both tracking the IT sector. Just quickly want to double check on something here. So with FTEC, like we said, it's extremely overweight the top holdings there of Apple, Microsoft, and NVIDIA. I mean, those three alone make up 45% of this ETF, and there are nearly 300 holdings. Just out of curiosity, I want to compare this to the IT sector ETF from Vanguard. And yeah, you're seeing the same thing here, right? So Apple 18%, NVIDIA 15%, and Microsoft 13%. Not exactly the same, but truthfully, pretty much on point here with VGT as well. So FTEC, if you want concentration into the IT sector in the US, it's a very, very viable option. It's a low cost option. Exposure to with FTEC, it's just under 300 companies, very similar to a VGT, which has slightly over 300, but you're really going to be focused on Apple, NVIDIA, Microsoft, and to a lesser extent, Broadcom. So thanks for watching. Just kind of quickly wanted to go through this FTEC review, recommendation from a subscriber. I hadn't been aware of it, so that was kind of neat to take a look. I appreciate you watching. Hope you got something from it. Maybe you learned something. If you enjoyed it, like, subscribe, all that good stuff. Take care. Try and survive out there with some brutal markets right now. Thanks for watching. Bye-bye.